Internal Revenue Code, Section 864, Part 2. Definitions and special rules. D. Treatment of related person factoring income. 1. In general, for purposes of the provisions set forth in paragraph 2, if any person acquires, directly or indirectly, a trade or service receivable from a related person, any income of such person from the trade or service receivable so acquired shall be treated as if it were interest on a loan to the obligor under the receivable. 2. Provisions to which paragraph 1 applies. The provisions set forth in this paragraph are as follows. A. Section 904, relating to limitation on foreign tax credit. B. Subpart F of Part 3 of this subchapter, relating to controlled foreign corporations. 3. Trade or service receivable. For purposes of this subsection, the term trade or service receivable means any account receivable or evidence of indebtedness arising out of A. The disposition by a related person of property described in Section 1221A1, or B. The performance of services by a related person. For related person, for purposes of this subsection, the term related person means A. Any person who is a related person within the meaning of Section 267B, and B. Any United States shareholder as defined in Section 951B, and any person who is a related person within the meaning of Section 267B to such a shareholder. 5. Certain provisions not to apply. The following provisions shall not apply to any amount treated as interest under paragraph 1 or 6. A. Section 904D 2BI relating to exceptions for export financing interest. B. Subparagraph A of Section 954B3 relating to exception where foreign base company income is less than 5% or $1,000. C. Subparagraph B of Section 954C2 relating to certain export financing. D. Clause I of Section 954C3A relating to certain income received from related persons. 6. Special rule for certain income from loans of a controlled foreign corporation. Any income of a controlled foreign corporation, within the meaning of Section 957A, from a loan to a person for the purpose of financing. A. The purchase of property described in Section 1221A1 of a related person, or B. The payment for the performance of services by a related person, shall be treated as interest described in paragraph 1. 7. Exception for certain related persons doing business in same foreign country. Paragraph 1 shall not apply to any trade or service receivable acquired by any person from a related person if A. The person acquiring such receivable and such related person are created or organized under the laws of the same foreign country, and such related person has a substantial part of its assets used in its trade or business located in such same foreign country, and B. Such related person would not have derived any foreign-based company income, as defined in Section 954A, determined without regard to Section 954B3A, or any income effectively connected with the conduct of a trade or business within the United States from such receivable if it had been collected by such related person. Regulations. The Secretary shall prescribe such regulations as may be necessary to prevent the avoidance of the provisions of this subsection or Section 956C3. E. Rules for allocating interest, etc. For purposes of this subchapter, 1. Treatment of affiliated groups. The taxable income of each member of an affiliated group shall be determined by allocating and apportioning interest expense of each member, as if all members of such group were a single corporation. 2. Gross income and fair market value methods may not be used for interest. All allocations and apportionments of interest expense shall be determined using the adjusted bases of assets, rather than on the basis of the fair market value of the assets or gross income. 3. Tax-exempt assets not taken into account. For purposes of allocating and apportioning any deductible expense, any tax-exempt asset and any income from such an asset shall not be taken into account. A similar rule shall apply in the case of the portion of any dividend, other than a qualifying dividend as defined in Section 243B, equal to the deduction allowable under Section 243 or 245A with respect to such dividend, and in the case of a like portion of any stock, the dividends on which would be so deductible and would not be qualifying dividends as so defined. 4. Basis of stock in non-affiliated 10% owned corporations, adjusted for earnings and profits changes. In general, for purposes of allocating and apportioning expenses on the basis of assets, the adjusted basis of any stock in a non-affiliated 10% owned corporation shall be I. Increased by the amount of the earnings and profits of such corporation attributable to such stock and accumulated during the period the taxpayer held such stock, or E. Reduced, but not below zero, by any deficit in earnings and profits of such corporation attributable to such stock for such period. B. Non-affiliated 10% owned corporation. For purposes of this paragraph, the term non-affiliated 10% owned corporation means any corporation if I. Such corporation is not included in the taxpayer's affiliated group, and I. Members of such affiliated group own 10% or more of the total combined voting power of all classes of stock of such corporation entitled to vote. C. Earnings and profits of lower-tier corporations taken into account. In general, if, by reason of holding stock in a non-affiliated 10% owned corporation, the taxpayer is treated under Clause 3 as owning stock in another corporation with respect to which the stock ownership requirements of Clause 2 are met, the adjustment under subparagraph A shall include an adjustment for the amount of the earnings and profits, or deficit therein, of such other corporation which are attributable to the stock the taxpayer is so treated as owning, and to the period during which the taxpayer is treated as owning such stock. Stock ownership requirements. The stock ownership requirements of this clause are met with respect to any corporation if members of the taxpayer's affiliated group own, directly or through the application of Clause 3, 10% or more of the total combined voting power of all classes of stock of such corporation entitled to vote. Stock owned through entities. For purposes of this subparagraph, stock owned, directly or indirectly by a corporation, partnership, or trust, shall be treated as being owned proportionately by its shareholders, partners, or beneficiaries. Stock considered to be owned by a person by reason of the application of the preceding sentence shall, for purposes of applying such sentence, be treated as actually owned by such person. Coordination with subpart F, etc. For purposes of this paragraph, proper adjustment shall be made to the earnings and profits of any corporation to take into account any earnings and profits included in gross income under Section 951 or under any other provision of this title, and reflected in the adjusted basis of the stock. Affiliated group. For purposes of this subsection, in general, except as provided in subparagraph B, the term affiliated group has the meaning given such term by Section 1504. Notwithstanding the preceding sentence, a foreign corporation shall be treated as a member of the affiliated group if I. More than 50% of the gross income of such foreign corporation for the taxable year is effectively connected with the conduct of a trade or business within the United States, and at least 80% of either the vote or value of all outstanding stock of such foreign corporation is owned directly or indirectly by members of the affiliated group, determined with regard to this sentence. B. Treatment of certain financial institutions. For purposes of subparagraph A, any corporation described in subparagraph C shall be treated as an includable corporation for purposes of Section 1504 only, for purposes of applying such sections separately to corporations so described. This subparagraph shall not apply for purposes of paragraph 6. Description. A corporation is described in this subparagraph if I. Such corporation is a financial institution described in Section 581 or 591. EI. The business of such financial institution is predominantly with persons other than related persons, within the meaning of subsection D4, or their customers, and I3. Such financial institution is required by state or federal law to be operated separately from any other entity which is not such an institution. D. Treatment of bank holding companies. To the extent provided in regulations, I. A bank holding company, within the meaning of Section 2A of the Bank Holding Company Act of 1956, and E. Any subsidiary of a financial institution described in Section 581 or 591, or of any bank holding company, if such subsidiary is predominantly engaged, directly or indirectly, in the active conduct of a banking, financing, or similar business, shall be treated as a corporation described in subparagraph C. 6. Allocation and apportionment of other expenses. Expenses other than interest, which are not directly allocable or apportioned to any specific income-producing activity, shall be allocated and apportioned as if all members of the affiliated group were a single corporation. Regulations. The Secretary shall prescribe such regulations as may be necessary or appropriate to carry out the purposes of this section, including regulations providing a. for the resourcing of income of any member of an affiliated group, or modifications to the consolidated return regulations to the extent such resourcing or modification is necessary to carry out the purposes of this section. b. for direct allocation of interest expense incurred to carry out an integrated financial transaction to any interest or interest type income derived from such transaction, and in other circumstances where such allocation would be appropriate to carry out the purposes of this subsection. c. for the apportionment of expenses allocated to foreign source income among the members of the affiliated group and various categories of income described in Section 904(d)(1). d. for direct allocation of interest expense in the case of indebtedness resulting in a disallowance under Section 246A. e. for appropriate adjustments in the application of paragraph 3 in the case of an insurance company. f. preventing assets or interest expense from being taken into account more than once. And g. that this subsection shall not apply for purposes of any provision of this subchapter, to the extent the Secretary determines that the application of this subsection for such purposes would not be appropriate. f. repealed. Pub L 7.2, Title 9, 967A, Mar 11th, 2021, 135 Stat. 184. G. Allocation of research and experimental expenditures. 1. In general, for purposes of Sections 861B, 862B, and 863B, qualified research and experimental expenditures shall be allocated and apportioned as follows. A. Any qualified research and experimental expenditures expended solely to meet legal requirements imposed by a political entity with respect to the improvement or marketing of specific products or processes for purposes not reasonably expected to generate gross income beyond de minimis amounts outside the jurisdiction of the political entity shall be allocated only to gross income from sources within such jurisdiction. B. In the case of any qualified research and experimental expenditures not allocated under subparagraph A, to the extent I. that such expenditures are attributable to activities conducted in the United States, 50% of such expenditures shall be allocated and apportioned to income from sources within the United States and deducted from such income in determining the amount of taxable income from sources within the United States, and that such expenditures are attributable to activities conducted outside the United States. 50% of such expenditures shall be allocated and apportioned to income from sources outside the United States and deducted from such income in determining the amount of taxable income from sources outside the United States. C. The remaining portion of qualified research and experimental expenditures not allocated under subparagraphs A and B shall be apportioned at the annual election of the taxpayer on the basis of gross sales or gross income, except that, if the taxpayer elects to apportion on the basis of gross income, the amount apportioned to income from sources outside the United States shall at least be 30% of the amount which would be so apportioned on the basis of gross sales. 2. Qualified research and experimental expenditures. For purposes of this section, the term qualified research and experimental expenditures means amounts which are research and experimental expenditures within the meaning of Section 174. For purposes of this paragraph, rules similar to the rules of subsection C2 of Section 174 shall apply. Any qualified research and experimental expenditures treated as deferred expenses under subsection B2 of Section 174 shall be taken into account under this subsection for the taxable year for which such expenditures are allowed as a deduction under such subsection. 3. Special rules for expenditures attributable to activities conducted in space, etc. In general, any qualified research and experimental expenditures described in subparagraph B, I, if incurred by a United States person, shall be allocated and apportioned under this section in the same manner as if they were attributable to activities conducted in the United States, and I, if incurred by a person other than a United States person shall be allocated and apportioned under this section in the same manner as if they were attributable to activities conducted outside the United States. B. Description of expenditures. For purposes of subparagraph A, qualified research and experimental expenditures are described in this subparagraph if such expenditures are attributable to activities conducted base on or underwater, not within the jurisdiction, as recognized by the United States, of a foreign country, possession of the United States, or in Antarctica, for affiliated group. A. Except as provided in subparagraph B, the allocation and apportionment required by paragraph 1 shall be determined as if all members of the affiliated group, as defined in subsection E5, were a single corporation. B. For purposes of the allocation and apportionment required by paragraph 1, I. Sales and gross income from products produced in whole or in part in a possession by an electing corporation, within the meaning of section 936H5E, and to dividends from an electing corporation, shall not be taken into account, except that this subparagraph shall not apply to sales of and gross income and dividends attributable to sales of products with respect to which an election under section 936H5F is not in effect. C. The qualified research and experimental expenditures taken into account for purposes of paragraph 1 shall be adjusted to reflect the amount of such expenditures included in computing the cost-sharing amount, determined under section 936H5C. I.D. The Secretary may prescribe such regulations as may be necessary to carry out the purposes of this paragraph, including regulations providing for the source of gross income and the allocation and apportionment of deductions to take into account the adjustments required by subparagraph B or C. E. Paragraph 6 of subsection E shall not apply to qualified research and experimental expenditures. Regulations. The Secretary shall prescribe such regulations as may be appropriate to carry out the purposes of this subsection, including regulations relating to the determination of whether any expenses are attributable to activities conducted in the United States or outside the United States, and regulations providing such adjustments to the provisions of this subsection as may be appropriate in the case of cost-sharing arrangements and contract research. 6. Applicability. This subsection shall apply to the taxpayer's first taxable year, beginning on or before August 1, 1994, following the taxpayer's last taxable year to which Revenue Procedure 9256 applies, or would apply if the taxpayer elected the benefits of such revenue procedure.